Hi, I'm Christine Benz from Morningstar.com. A few good mutual funds have reopened to new investors in recent months. Joining me to discuss them is Russ Kinnell. He's Director of Manager Research for Morningstar. Russ, thank you so much for being here.
Good to be here.
Russ, let's take a look at some of these funds. They're all funds that we like a lot, so we would put them forth as funds that investors should consider if they're making some changes to their portfolios or just want to add some good actively managed funds. Let's start with Artisan Global Value. This is a world stock fund. Let's talk about why it's reopening.
Yeah, it's reopening for the reason funds often reopen, and that is it had a bit of a performance slump. Last year it was third quartile in its category, and so that led to some outflows, and so they're reopening, though the record overall is still pretty strong.
Okay, so it's a globally focused fund. We don't typically see funds like that close to new investors because they do have such a broad universe to invest within.
That's right. It is kind of rare for a global fund to do that, but there are special circumstances. One, it's a pretty concentrated portfolio, and two, it's a pretty small staff at Artisan. So you have some reasons to kind of maintain that integrity, and that's why they closed it in the past. We don't know when they'll close it next, but it looks like a good opportunity today.
Okay, so it's a gold-rated fund. Let's talk about some of the key things that you and the team like about this particular fund.
That's right. It's run by David Samra and Dan O'Keefe, who used to be analysts many years ago at Oakmark's foreign funds, and you really see that same flavor of value, awareness of debt issues, and concentration of the portfolio. So there are a lot of similarities, and fortunately, performance has been similar in that both the Oakmark funds and their funds have been great performers. So really solid. Obviously, we like the fact that they had closed before because it tells you they're really shareholder-oriented. They're really focused on providing good performance for investors.
Okay. The next fund is Royce Premier. This is a fund that is bronze rated currently. Let's talk about it. It too has had some performance struggles, but it's one that you and the team like.
Right. I would call this a much more contrarian play because its slump has been much more pronounced. Its own materials and energy and really a lot of the stuff that's been hit very hard. Whitney George, who had been a co-manager, is no longer with Royce, I think in part because of that underperformance. So it's understandable why people would redeem this fund, but it's still got Chuck Royce at the helm. These sector biases can rotate and come back. It's still a pretty appealing fund. It's something of a best ideas of Royce, where they take the best names from a number of their portfolios, and so it's a kind of good group of small cap names. Still has appeal, even though obviously the recent performance has been pretty grim.
Okay. In terms of Chuck Royce, you mentioned that he's heading up the fund. He heads up a team here. Let's discuss succession planning. Chuck Royce has been involved in his firm's funds for many years, and sort of the road forward for Royce funds, and this fund in particular.
That's right. I think it's a good question. Anytime you've got a chief investment officer or a portfolio manager past retirement age, you need to start thinking about, well, who's in line to succeed. And Royce in the last few years has become a little more open about that. So this fund and some others have co-managers, so it's fairly clear who will take over. And certainly at Royce's age, you have to factor that in and think, well, these other co-managers are as important as Chuck Royce because presumably they may take on a greater role in the next 5 or 10 years. So I think you certainly want to look at that. And if you're buying today, you need to understand that Chuck Royce may not be running the fund for, say, if you're going to own it for 10 years, he presumably will have declining influence on the fund over time.
Okay. Another Royce fund that recently reopened, Chuck Royce does not manage this one. This is Royce Special Equity. I know you've long been a fan of Charlie Dreyfus and the strategy in place at this fund. Let's talk about this one.
Yeah, I am a big fan. This is my favorite Royce fund. I own it. It's in our 401k, so clearly I'm on board. It has had a performance slump, not as dramatic as Royce Premier, fortunately, but Charlie Dreyfus is a a value investor who looks for clean balance sheets, low prices, and that's kind of led him out of the more popular areas lately, so the fund has slumped a bit. But I really like the fact that he's doing something different from what others are doing, I think better because of his accounting background. He just really gets deep into his stocks and really has done a good track record of avoiding blow-ups and avoiding any kind of accounting problems. So I think of it, it's a defensive strategy that generally is going to hold up better. And so I think there's a lot of appeal there, even though it's been in a bit of a slump.
I noticed for the year to date, actually, in keeping with what you're saying about it being a good defensive performer, it's actually having a pretty good go of it relative to other funds in its category.
That's right. Last year was a bit out of norm in that it underperformed in a down year, but this year it's doing better. If you go back to 2008, if you go back to 2000 to 2002, he consistently does well in bear markets. So that's really the way you judge it. This is a fund you want to hold through a whole cycle and kind of go in understanding that in a big rally, this is not a fund that's going to have a big run itself.
And do you think of it as kind of a good diversifier if someone has that core U.S. equity, large cap exposure, that this would be a nice complement to that sort of fund?
Definitely. He's a long way away from that area. If you, say, have a large growth fund with a lot of the really popular Apple, Google kind of names, this is completely different.
Or even an S&P 500.
Right, even an S&P 500 fund. That corner of small value can behave fairly differently. And I think with so much competition out there, this is still a fund that really looks differentiated to me.
Okay, Russ. Some recently reopened funds that you think investors should give a look. Thank you so much for being here to discuss them with us.
You're welcome.
Thanks for watching. I'm Christine Benz for Morningstar.com.